Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be reviewing the key US stock indices in this video segment. New subscribers, welcome to the channel. Old subscribers, thank you very much for watching and supporting the channel. And for those of you guys who like to watch our content but haven't subscribed yet, please do subscribe. What are you guys waiting for? This video is for educational purposes only and it is not a financial advice. So guys, the last video which we had done in which we reviewed these major indices, we actually discussed a very key concept, which is the market symmetry. It is one concept which we like to cover over and over again because in market chart pattern, one of the things we like to discuss, talk about, and actually show to you guys is that markets like to repeat over and over again. And this behavior is called the symmetry in the market or market symmetry. So I'm going to spend more time on the SP 500 E-mini futures than the other indices. We're going to use the E-mini futures as kind of a pattern guideline for the key levels that we are watching for or anticipating to happen in the future in terms of the forecast. So guys, when we looked at the in this index, the S&P 500 E-mini futures on the daily chart, one of the things we had noted was this line here around the 40.69 level, and then we had this upper line here which is this 42.09, and we had actually clearly identified these levels as being a range. So it's a pretty wide range actually, but if you look at how much the E-mini likes to move, it's pretty reasonable actually. And the key concept that we looked at was this market symmetry. So if you look at this ABCD formation highlighted in this maroon line here, ABCD, the biggest correction that took place in this was of this much magnitude. And look guys, if I just point this from top to bottom here, that was the actually the high, comparatively speaking to the high on the left hand side. It came right to this level of around 40.60, which also happened to be the 38.2% Fibonacci retracement right here. And when this pullback had occurred right here, it did not really fully go to this one, to the 38.2% Fibonacci retracement. It was close enough, and then it just traded to the upside, and then it found resistance on the left hand side coming from this structure, went back into this range, and in fact on Thursday, 4th of May 2023, it retraced right to the 38.2% Fibonacci retracement of the lows coming from 13th of March. And it was also a day after the FOMC rate announcement was made, where the Fed hiked by 25 basis points. And last Friday we did not have a follow through. So look at the candle formation, such a night and a white candle, a white night actually, which is also a bullish engulfing candle, and it actually came as a surprise for quite a few people. But again, we had identified this level. We believed in this market symmetry. And what we had mentioned was that if this market symmetry was going to break to the downside, so basically on 2 consecutive daily basis, then that was going to change the narrative and we would begin to look at the market in a different way. So guys, one of the things is that it is actually, we're going to show this on the weekly chart as well, but it is setting up an interesting situation now. And the interesting situation is that we have a possible another ABCD formation taking place. So what is that ABCD formation? So what we are now looking at is that this low formed last Thursday, 4th of May 2023, may in fact be a C point. So what we're going to do is, let's take this to this. I'm going to draw it here because it's just a little bit convenient to do it this way. Here, copy this, and if we project it from here, then where are we going? Around 44.30. So I've written 4400 roughly, but in fact we are going a little bit higher. Let me actually point this out as an ABCD here so that it's a little bit clear to see. So A, then this is gonna be our point B here, and this is going to be C, and this will be point D into one-to-one projection. And I'm just going to shift over to the weekly chart, which we also had a look at last week when we did our analysis. And here we go on the weekly basis of the lows of October 2022. We have an ABCD formation which takes us to around 4450. So guys, we have a time frame where we have the daily and the weekly kind of pointing in a very close confluence level in terms of our ABCD projections, which are one-to-one projections. So also, while looking at on the weekly chart, look from a momentum perspective, it's pretty strong because the price, although it formed a bearish candle, but look, this is a double bottom formation right at the 38.2% Fibonacci retracement. From a momentum perspective, this is a gray line 200 week moving average, and the 20-week moving average right below this candle also providing support. So from a momentum perspective, it's also pretty good momentum. So guys, what we are looking at is that perhaps, even though there is so much negativity in terms of, YouTube's affair, where there is news about recession coming because the oil price are collapsing, something else is happening. But when we look at the price action, look, this market is pretty strong and it's just been going up for the last 8 months. And look at this trend line here. This is the trend line which the whole world was watching at a point in time. We once had a really bearish price action here on the 12th of December week. And then what the price did, it tried to break up out of this range, went back into the range, right, tested this trend line, rejected lower levels, and is moving higher. So we really have to look at what the price is doing. So clearly it's also at these levels which are, which could be pretty strong resistance. But the market is not backing down, and we have seen that on the daily chart here, just going back to it. There we go. So it's in fact formed a double bottom formation here. So I'm going to write this, make it a little bit smaller. Double bottom. Here we go. Because this is what it is. It's just a double bottom right here, 38.2% Fibonacci retracement. So guys, this is what we are, what we are looking at, and what in terms of the ABC projection, the levels, kind of levels that we are watching for. So let me actually make it 30. Here we go. And if the price action breaks down and this support, which is in fact our point C, is broken to the downside, specifically to daily closing basis, then this ABCD will be off the table. And what we will be looking at is, we'll reevaluate things, and we might have a different situation to look at then. So while we are at it, let's take a look at NQs. So the NQs have been really leading here. And again, here, the same concept which we had discussed last week also in terms of the market symmetry. Look at this, how much symmetry is in the market. Boom, boom, boom. So in fact, this index is pretty strong. It's also range bound in a shorter term right here. This is the kind of the range we are looking at. Here we go. And it's just retraced per the market symmetry, and it's just testing the upper boundaries, and we'll have to wait and see when it breaks out of it. Let's quickly take a look at the Russell 2000. So this is one of the index which is the weakest small caps. Small caps tend to be pretty sensitive to the interest rates because the balance sheets of these smaller companies, tend to be not as strong as the much bigger companies. So, any loans, etc., debt servicing could become expensive and strain on cash flows, for example. So here, in fact, what we were looking at was uh, this support level as 78.6% Fibonacci retracement, but in fact the price went below that. But last Friday, look at this, really nice kind of formation. So it also seems to be finding some sort of support right at these levels of from March, and then going back to around, yeah, the March levels. So guys, this is what we are watching at in uh, basically for the major stock indices. And if this formation ABCD, in fact the price, if it is moving in an ABCD formation, then we are looking at 44.30 to 44.50 as the possible next price levels to watch for, where the market would actually go and test these levels. While we are at it, let's quickly take a look at the Apple stock. So guys, the Apple stock, it has met our range targets of 171 to $175 per share. We were also watching for this pattern formation. This is the wedge, and then we also had a possible three drives to a top, but that seems to have failed, in my opinion, because look at this strong price action. If the Apple begins to go and actually test the higher range of $175 per share level, then the broader market is also likely to move higher, because Apple is a pretty big component in majority of these indices. And for the weekly level, look at guys, we are approaching very close to this point D, around $175 per share level. And looking on the left hand side, there is possible some structural resistance coming in from roughly about this zone. But Apple momentum is pretty strong, right? And with this D point, this was a target. But if the momentum is pretty strong, the in fact this D target could extend, and it could extend by 1.618. So let's just quickly take a look at that. 1.618 would in fact break out of this range and go to around $197 per share level. That's also a possibility. All depends upon how the market is going to perform when it reaches this zone that we are looking at. So guys, this is what we are looking at in terms of the major stock indices. And if you like how we look at the markets in terms of the analysis we do here, how we use the pattern recognition, Fibonacci retracements, projections, expansions, then please do subscribe to this channel. And if you find this video for educational value, then please do like the video. That way I just get to know that people actually find videos useful for educational purposes, and just encourages me to keep on making more videos. So thank you very much guys. Good luck and good trading.